And again, the biggest challenge to all this is the pressure by society for corporations to do good things. You have to show that you're making contributions. So this is where enlightened value maximization comes in. What investments can you make in your share which you can demonstrate are actually increasing the value of the firm? And part of this, this stuff doesn't show up in cash flows. A lot of it shows up in the cost of capital. So investors, if they like what you're doing, like Warren Buffett, I argue that investors will give you a lower cost of capital. That is, they will put a higher price earnings multiple on your shares, and if only because you have less political and regulatory risk. This makes sense in economic terms, but it also makes investors by giving them a lower cost of capital. Now, if you're an ESG investor, the downside is you're not going to earn abnormal rates of return. You're actually going to earn lower rates of return, because the lower cost of capital means a lower expected return. So ESG investing per se just has lost its luster completely because the markets are giving these companies a lower cost of capital. So there's nothing left for you as an investor to profit from that. And that's part of the scam.